Well, hello everybody and welcome to our Calgary real estate market update for August. I'm going to take you through the little bit of news that we've had hit the airwaves in the last 30 days. Certainly been a lighter month for news as it pertains to Calgary real estate, but we are seeing some interesting statistics that are forming some trends that I expect to continue for the rest of the year. So let's get a sneak peek into what we might see in the fall and also cover the last month's market data. Let's get going. First up, we're doing well for new construction here in Calgary. We are a bit of an outlier with respect to major municipal centers across the country in that we are getting new units built. So Calgary has taken some of the funds that they received from the Housing Accelerator Fund put forth by the Liberal government last year, and we're building more units than they have targeted for us, and so we're qualifying for even further funding. This is really good news as we're adding supply to maintain our affordability advantage relative to other markets in the country. What's also good news is that Prime Minister Carney was in Calgary during Stampede and was certainly pressed by the local media here to talk about, are we going to see a pipeline on this major projects list that Prime Minister Carney has been in the press about, where you can fast track the development of projects that are in the natural interest. So seeing him saying that it's highly likely that we'll have an oil pipeline make that major projects list, that's of course good for the Canadian energy industry and by extension of that, Calgary. So welcome news here. Now we just need to see it actually get built and move forward. On that same kind of wavelength, last month we talked about the first liquefied natural gas tanker leaving port here in BC to heading over to Asia. Well, now we can say that it's arrived, and so there is Canadian natural gas now hitting the Asian markets for the first time ever. This is really great news, and I think this is a good sign because now more and more people and countries and entities in Asia now are going to be receiving this energy. The connections are going to get built up. The demand for more is going to be there, and I just think we're seeing more and more people talking about it, and hopefully that means more ships, just like this very first one, making the voyage across the Pacific to Asia to open up other markets to our energy industry here. So that's also good news. Rents coming down a little bit. So if you're a landlord, maybe this isn't welcome news, but I certainly don't think that this is a bad thing, again, to maintain our housing affordability advantage. And much in the same way that it's very difficult to take generalizations and make decisions on that when you're talking about a real estate market, because certain asset classes are going to trade in different ways, and certain locations in the city are going to be in more demand than others. But and it's the same thing on the rental market too. So a rental unit is not a rental unit is not a rental unit. You can have apartment style, you can have townhouse style, all that sort of things. But at any rate, we're seeing rents falling here in Calgary like it is elsewhere because of more supply being added to the market, which is again a good thing for the long-term health of our real estate market here in Calgary. So rents coming down just a little bit. Now let's jump into the sales statistics here for this month. We've had another soft month here in Calgary. Last month, the June data showed, June's data, so last month, that we were down 3.6% year over year to an average sale price of $586,000. Well, we've come down yet again, down by 3.9% year over year here in July to an average price now of just under $583,000. So you can see here that we're pretty close to back to early 2024's numbers in terms of overall pricing. So we've now given up most of the gains that we saw during the very hot time of the year at the beginning of 2024 last year, and pricing has sort of slowly worked its way down to being just under $583,000 where we are right now. And then the red line here is sales. So we saw a little bit of a blurb, bit of an outlier here last fall. Other than that, it's followed this traditional late selling season decline in sales, and then we did see sales pick up here at the beginning of the year, and now we're coming back down again. So usually in August and in September, we will see sales wind down for the rest of the year. Last year, prices stayed flat. This year, I'm not really sure. We might end up seeing prices come down even further, just given the amount of additional inventory that we have hitting the market. And now here's something that kind of show year over year. I know these numbers are really small, but hopefully you can see them. But year over year, our total sales are down 17% cumulatively. So all of the sales up until the end of July were down 17% over this time last year. Okay, months of supply is more than doubled year to date. Last year we were still well under 2, just over 1 month worth of supply year to date. Now we're just under 3, so we are in buyer's market territory according to the statistics here. That's a big change. Those two things are a big change. Fewer sales, so less buyer demand, and then more listings, more supply available is resulting in those declining prices that we've seen so far. But those are generalizations based on the data for the entire market, okay? And a really important theme that I'm looking to get awareness around is that there are markets within the Calgary real estate market. And so you can see here, there's 4 different asset classes here, and they're showing different numbers. So the detached pricing is only down 0.8% year over year from where we were last year, and semi-detached is actually up 1.4%. So these are almost even. But if you look below that to the row price, the apartment price, they're down considerably more. So down 3.9% and then 4.8% year over year for apartment pricing. Okay, so when we talk about our overall market being down, 3.9% year over year from 2025 to 2024, well, if the detached segment's only down 0.8 and the semi-detached is actually up 1.4%, then we've got to have quite a few number of apartments that are selling below to pull that average pricing down. Okay, and that's some of the things that you need to look into, because if you're a consumer in a detached price in a certain community, your experience is going to be dramatically different than if you were, say, a condo buyer in, say, the Northeast or something like that, right? You can see here in terms of locations what I'm talking about, where on the east end of the city, pricing is down by 7.2% year over year. In the east end, 7.4% versus the west end of the city, only down 2.3, or the northwest down 2.7. Okay, so you really have to dial into what type of property and asset class you're trading in and what area of the city you're trading in to actually find out what your experience is going to be like as a consumer. You can't really just look off of headlines to do this. You can see here the months of supply has now started to change as well. And this is going to form that trend heading into the latter half of the year. I think we're going to see a more pronounced buyer's market out there. There's going to be opportunities for buyers to get some good deals on some real estate here, because we've broken this pattern, all right? We were coming down last year. The market was softening, and then we hit balanced market territory and stayed there for quite a while, about half a year, where it was looking like the market could break either way here, all right? Now we've headed into the summer months, and we've seen a trend happen that we wouldn't typically expect, which is moving into buyer's market territory in the summer months. Okay, so that's what we've seen here now, and you can see here where we're sitting now is the highest amount of months of supply that we've been since I've been tracking this data set, and the most that we've seen in a couple of years here at 3.3 months worth of supply. Okay, and you can kind of see here what I mean about different locations and property types. This is a great graph that kind of tells you everything you really need to know about our market, to be totally honest, because you can look at the 4 different categories here, and then if you envision a line at 2.5 months worth of supply, I should have put one on here, sorry about that, guys, but if you put a line here, 2.5 months worth of supply, you can see whether you're going to have buyer's market conditions or seller's market conditions in the area of the city that you're trading in and in the particular asset class that you're looking to trade into. Okay, and I think that consumers really do owe it to themselves to drill a little bit deeper into those statistics, or you might end up being surprised at what you encounter out there. You may be expecting it to be a softer market, but lo and behold, you're shopping for a detached property in Northwest Calgary, and it's a seller's market there still, right? So dig a little bit deeper, have your realtor provide these statistics to you so that you can make some informed decisions. In terms of overall sales, so looking way over here on the right end of the graph, you've got just over 2,000 sales in this particular month, or in July of this year. That's lower than we've seen in any of the pandemic years, 21 to 24, but still markedly better than anything we had in the economic downturn here. Okay, so not a bad news story, just not as red hot as it was during the last few years when we were in very strong seller's market territory. Now, inventory, you can see here, is kind of going the other way with that, right? And this is why pricing is starting to come down, is we're now getting more and more supply that's hitting the market. We're seeing quite a bit more hitting the market here. Listings are hanging out a little bit longer. And if this trend continues, I do think that we're going to see pronounced buyer's market conditions. We will probably, crest the mid threes in terms of months of supply, maybe even knock on 4 later this year. Yeah, we're seeing more inventory coming to market, which means more selection, a little less pressure on buyers. And I think buyers are kind of due for that break after a few years here where the sellers were holding all the cards here in Calgary, okay? In terms of year-over-year price comparisons, you can see here very few asset classes are showing positive year-over-year gains. Almost everything is down, but everything is not going to be down by the same amount, right? So again, what type of property you're looking to trade in and where is a really important question for consumers to be asking themselves because you need to know what the market's going to be like in the area that you want to trade in. Okay, looking at overall sales here, my last graph of the update here today. You can see our total year-to-date sales for the end of last month was pretty close, just above that 10-year average, and then it's almost the same here for July. Okay, and I think these 2 months taken together are going to tell us what the rest of the year is going to be like as well. Okay, as we enter into the latter half of this year, in 2024, we were in balanced conditions, sales were coming down everywhere. We're going to see the same overall effect for the latter half of this year. So I think that these two graphs are probably going to be indicative of what we can expect the last several months of the year to be like, guys. So not a bad year by an extent, but just not as red hot as the 4 previous years that we have seen from that. All right. So I hope you found that to be informative. This is usually one of the slowest months of the year in terms of news, and a lot of exciting stuff. So very much looking forward to getting back at it here in the fall. I hope you guys are having an awesome summer out there, and we'll see you in September. Thanks very much for watching. Bye now.